You ever notice how your uncle brags about his stocks and your other uncle brags about his casino winnings? They both think they're geniuses. They're both wrong, but for different reasons. Today, we're going deep because one of these things is a financial instrument backed by actual companies, and one is a machine designed to take your money. And somehow, people confuse them constantly.
Let's start with gambling. Gambling is simple. You give money to someone, there's a random event, either you win more money or you lose your money. That's it.
The key word here is house edge. Every single gambling game, slots, roulette, blackjack, sports betting, is mathematically designed so that over time, the casino always wins. In roulette, the house edge is about 5%. In slots, it can be as high as 15%. That means for every $100 you put in, the machine is designed to give back 85 to 95. Not on every spin, but over thousands of spins, the math always wins. And the casino knows something that you don't feel in the moment. The longer you play, the more certain your loss becomes. Time is literally your enemy. Okay, now let's talk about the stock market. The stock market is where you buy tiny pieces of companies. These pieces are called shares. When you buy a share of a company, you own a tiny part of it. If the company makes money and grows, your share becomes worth more. If the company fails, well, you know. So here's where people get confused. The stock market goes up and down every day. Prices fluctuate. People panic. People get excited. It looks a lot like gambling. You're not beating the market. The market is beating you and charging you transaction fees while doing it. But, and this is a big but, the stock market has one thing that gambling will never, ever have: positive expected value. Over long periods of time, like 10, 20, 30 years, the stock market as a whole has historically gone up. Not every stock, not every year, but the broad market, up. In gambling, the more time passes, the more you lose. In long-term investing, the more time passes, the more you gain. Time is your enemy at a casino. Time is your best friend in the market. So they're completely opposite, right? Gambling bad, stocks good. Case closed? Not so fast, because the stock market can absolutely ruin you too. Let me tell you how. Mistake number 1, picking individual stocks without research. Most individual stocks do not beat the market average. Buying random stocks because your cousin recommended them or because you saw a TikTok, that is gambling. You just don't call it that. Mistake number 2, leverage and margin trading. This is where brokers let you borrow money to invest more than you actually have. Sounds great when stocks go up, devastating when they go down. People have lost their entire life savings through leverage trading. At that point, you're not investing, you're gambling on borrowed money. That's a different level of dangerous. Mistake number 3, crypto and meme stocks. Look, I'm not here to tell you crypto is worthless, but buying Dogecoin because Elon tweeted a meme? That is pure speculation. It's gambling with a tech skin on it. And the worst part? Sometimes people win in these situations, big. And that win is more dangerous than the loss. Because a big win makes your brain think you found a system. You didn't. You got lucky. And that's exactly how people blow up their accounts. This is called the gambler's fallacy. Your brain is genuinely bad at understanding randomness. It looks for patterns where there are none. Both gamblers and bad investors fall for this constantly. So what's the actual difference between gambling and investing? Take a quick look at his Venn diagram. Gambling, negative expected value over time, zero ownership, pure chance. House always has the edge, designed to be addictive. Investing, positive expected value over time. You own real assets, backed by company earnings. Time works for you. Returns compound. Invest right, because investing done wrong starts to look a lot like gambling. If you want to invest without gambling, buy broadly diversified funds, hold for the long term, don't panic when things drop, and never invest money you can't afford to lose. If I were you, put little savings or funds aside, leave it, wait for years, and you will see your money going up.
Sure, if you can't help it, gamble fun money. Don't even gamble your house or savings.
Casino will make you think math is logical. Math doesn't ruin you. You ruin you. The smartest move? Understand the math of whatever you're doing. Know the rules of the game and know which game you're actually playing.
That's it for today. If this actually helped you understand money a little better, or gambling a little worse, subscribe. Also, leave a like.